Welcome to this episode of the Launch Capsule. I'm Jim DuBos, and today we're going to go through the 7 stages that every business that I've successfully exited over the last 35 years, these 7 stages repeated themselves. And so I thought it was critical to give you some insight because, look, I know many of you may be in the launch stage, you may be in a stability stage, a growth stage, a scaling stage, wherever you are. I can promise you, if you're trying to build a business that ultimately you want to get to an 8-figure exit, you're going to go through these stages. And so I think it's important that you understand what those stages are, you recognize where you are in the journey, and then what are going to be the demands that you need in order to be able to execute successfully. So thanks for joining me, and let's get started.
Welcome to the Launch Capsule. With your host, James DuBos. Buckle up because your launch capsule begins now.
Liftoff. We have a liftoff.
Stage 1 is really what I like to refer to as the startup phase. It really is the place where I think Elon Musk said it best. Being an entrepreneur is like eating glass and staring into the abyss of death. And it's really this place, it's the jungle, right? Where you're validating the idea, you're selling to anyone, right? Trying to find that validation, if you will, of your customer profile. And you're wearing, honestly, every hat in the building because you may be the only person in the building at that time. And so if you think about this stage, what's the number one job that you have? And that is to ensure the product to market fit. Is the product or service that I'm offering matching the problem you're solving, right? Is it what the customer ultimately is asking for? You're not looking for the perfect logo or the website. It's really a simple process. Sell, deliver, learn, and repeat. So this is an iteration cycle that's going to occur. And this is also the time where you may add the first 3 to 5 hires in the business. And initial hires are typically people who are believers. They're believers who can do just about anything in the business. And another way to think of it is kind of multi-tool type individuals. So the biggest, I'll say, trap in this moment is you start to think about perfection over progress. So don't get too hung up on perfection. Focus on, am I making progress towards the validation and the stabilization of the business? I think one important thing to consider is that strategic planning, if you will, is a bit messy at this stage. I think it's important to have a simple business plan thought out and written out so that you go into the startup phase with an idea of what you think you want to accomplish. But you're not building 5-year visions. It's more like 90-day sprints. They're simple milestones, customers, cash flow, product and service feedback, and you want to repeat those on a 90-day cycle. So the strategic plan could be as simple as, I'm going to write it out on a napkin, right? And that's okay in this phase. Like I said, I think a simple business plan, it doesn't have to be fancy, and I've got a dedicated course just on how to create that with a template that makes it simple for you. But if you think about what's going to be in that plan, you're going to have a problem and solution, the pain point that you're solving and how you're doing it. You're going to have a target market. This is who I think my initial customer is, and try to be as specific as possible when you do that. You'll have a value proposition. How are customers going to choose you over the alternatives that are in the market? You'll demonstrate a revenue model. How you're going to make money. Is it subscription, one time, a blend? What are the services and products you're offering? What's the go-to-market strategy? How are you going to find the customers? Close your first 10 to 100 customers. The key milestones. What's critical for the success of the business outside of revenue and profit for the next 6 to 12 months? And then the founding team. Who are the people that are on the boat initially, and who are the founders, and what are their roles? Clearly defined roles and I'll say responsibilities to the business. So this basic plan is going to test some assumptions. It'll give you, I'll say, the ability to attract some early supporters, and it'll focus your energy where it matters the most. Some of the core, I'll say, my own experience in building businesses or milestones and key performance indicators, right? I think it's important to have milestones and it's important to have measurements in the business if you want to be successful. And so my own experience in a product and service combined business where I was predominantly selling B2B or B2C, I wanted some financial milestones. And so typically, depending upon the percentage of product to service, I found that it was anywhere from that 100K to $1 million annual revenue experience, that you had a monthly burn rate that was clear and under control, and you had your basic accounting systems obviously in place with those basic functions. The key performance indicators or the measurements are typically things like customer acquisition cost, the monthly recurring revenue, MRR, is very important. Runway, months left of cash, is a key measurement that I would encourage you to pay attention to, and the conversion rate. So how are you converting from lead to customer? So this first year, I typically see this as a 12-month to 18-month type launch stage. These have been the characteristics in my own experience that make up that launch phase. All right, so stage 2 is what I'll refer to as a stability stage. And my own experience has taught me that this is generally between a $1 to $3 million gross revenue stage based upon the gross margin that you're operating with. One of my favorite quotes in this stage is by Seth Godin. Don't find customers for your products, find products for your customers. He's the author of Purple Cow and This is Marketing. And it's really a people first type approach to growth. And if you think about this stage, another way to consider it is it's past the toddler phase, and you've got revenue, you have a small team, and now you're starting to build systems into the business itself. What are those systems that you have to think about? Well, I need to think about a sales system, a delivery execution system, an operational system, financial systems. This is where we start to consider some repeatable processes. You're pulling yourself out of the weeds and running around with your hair on fire a little bit. Your goal is really just reliable results without daily chaos. Another way to think about it is I don't want to walk into the office every day with a basket of flaming squirrels on my desk. So you want this stage reliable results without chaos. Strategic planning in this stage becomes more intentional. And what I mean by that is you're setting quarterly goals and you do want to consider a 12-month roadmap. You want to be thinking about people and processes, systems, the team capacity. It's still founder led, meaning yourself as the individual founder or the team of founders, but it's a more structured approach. Some of the key financial milestones that I think are critical in this stage are, again, that minimum of $1 million to $3 million based on your gross margin is important. You should be a minimum break even or profitable. You should have marginal profitability. And you want to see a minimum of 20% year over year growth. Now, my own experience, okay, is in the first 5 years of the companies that I exited, I had year over year 100% growth. So that was the average. The 20% year over year growth is a very conservative number, and it really depends on the product and service that you're selling. But my own experience having highly profitable exits has been super growth, 50, 60, 70, 80, 100% year over year growth for the first 5 years of the business. Now, the key performance indicators, the measurements that I like to look at in my own businesses were first customer retention. I wanted as little to zero customer churn as possible. Number two, I wanted to focus on gross margin per transaction. So obviously the average gross margin, the higher I could raise the margin, the better I had the opportunity for cash to grow the business. I wanted a very strong lead to close ratio. Again, you're thinking about the cost of acquisition. So the more, I'll say, success that I can have on a per lead basis, the higher my growth opportunity is going to be. And then things like employee productivity metrics. Okay, I'm going to use that as a bucket based upon the type of business that you might be operating in. It's really things like revenue per employee or a productivity score. Maybe it's the volume of transactions or the amount of I'll say problem solution type interactions that they have. But again, this is really around employee productivity metrics. Revenue per employee is one of the more popular ones. I'll say that in my higher exits in terms of dollars, I had very, very high revenue per employee type characteristics. And so these are the types of things that you'll think about in this next stage, if you will. So in stage three, I'm going to refer to it as simply the growth stage. So if you think about this in terms of maybe a third year, okay, I would say you're in a $3 to $10 million moment. And so if that's where I'm at, and I'm using my own background and experience, by the third year, I'm typically in this $3 to $4 million range where I'm starting my growth phase, right? Because by the time I hit my fourth or fifth year, I'm at $8 to $10 million. So this is the goal here. This is where you're going to start to throw a little, I'll say, gasoline on fire. Marshall Goldsmith made a great quote when he said, "What got you here won't get you there." And it's really this identifying the habits that you need to keep versus the ones you need to change so that you can keep growing. Okay. And another way to think about this might be this is an awkward teenager phase. You're growing fast, but it's a little messy, which is okay. Right. Which is okay. This is also the phase where you'll start to need some, I'll call it middle management, supervisory, if you will, over the teams. You're also going to need in this phase to evaluate your technology stack to make sure that you're implementing a stack that can manage the growth that you're getting ready to inject on top of the business. You're going to need really, really clear measurements because you're going to have managers and you're going to be indicating to them the things you want them to pay attention to. So hiring does become a little bit of a science. You want to make sure that your hiring processes are clear. Things like, I need role clarity. What are the functional skills that I need in those positions? The other thing to think about here as you're expanding the team is your culture. Am I paying attention to the type of operating environments that I'm bringing an employee into, the leadership style, if you will, that you have in the business? And that's going to be an evolution, but you're going to want to be clear that as you're bringing new employee community into the business, that their experience is very high. So one of the clear things I like to say is you have to have the ability to adapt. Otherwise, you're going to become a bottleneck in the business. So at this stage, strategic planning is very much an annual planning process. You're going to host team offsites. You're going to be setting measurements. You're going to be aligning these departments, and each of the functional areas of the business is going to have its own priorities. So let's walk through some of these types of priorities. Let's start with sales. So you'll have specifics, I'll say, priorities around pipeline targets, the channel. You'll make sure that you have your sales quotas for the teams aligned and completely assigned to the entire sales team. There may be some sales processes. There may be better tools and training that you have to implement to be ready for this growth phase of the business. Operationally, you're going to be looking at your overall workflow efficiency, your execution. You're going to be looking at where are the places for bottleneck. You're going to be looking at your fulfillment or service delivery execution systems to make sure that they can scale as you grow the business. In the marketing side, you're focusing on clarifying your position, doubling down on the channels that are converting well, eliminating the ones that don't, creating calendars and aligning those calendars with the growth goals. In the finance area, you're very much looking at forecasting models. You're looking at budgeting. You want to manage your cash flow tightly, understanding where you're going to place strategic bets and establish this internal reporting rhythm, P&L, budgets versus actuals, these types of things where you have this muscle memory around finance so that you can stay very close to the actuals versus projection in the overall model. Human resource, obviously you have to create a hiring roadmap, not just for the needs today, but where are you going to be in 12 and 18 months and what types of hires do you need? Because you're going to need to build those benches across the company to be ready to grow. You also need to be sure you have a formal review system the way you give feedback to the employee community, as well as, again, really looking at your culture and making sure that you're building these very focused, intentional, employee-centric type companies. I've got separate podcast episodes where I've talked about building employee-centric environments, because in today's highly competitive talent pool, it is going to be your culture that's going to allow you to grow in the way that you need. A great way to think about this is now everybody's trying to row in the same direction, but they all get their own, paddle, if you will, right? So some of the key operational challenges that you're going to experience during the growth phase, which is why it's a little messy, you're going to have a lack of process consistency. So the team is going to be growing and the old processes are going to break, right? So you're going to have a formal standardization and documentation. This is, again, where tools are really important to make sure that you can document the actual processes so that as new employees come on board, they have a place to go to learn about those processes. You'll have a bit of a middle management gap, and so you're going to need to train managers. Many times it's growing from within because those who have been with the company the longest potentially have some of that institutional knowledge. So you have a tendency to get pulled back into the weeds. And so you'll really need to focus on delegation, training those middle managers, and investing in the leadership development of the group of managers. You also have a potential for siloed systems. And so the key is going to make sure that you're investing in tools that allow you to scale, measuring the effectiveness of each one of the functional areas in the business and say, are my tools scalable? Will they get me to 50 or $100 million, which is where you want to be in the course of this endeavor? And finally, measuring customer experience, making sure that as you grow, you don't want to dilute quality and experience on behalf of the customer. So you need to focus on those measurements and focus on how you maintain quality service levels with the customers. So you're going to need some key hires. You'll need strong operational leads. Again, you'll have to define and document those standard operating procedures, those SOPs, internal training, onboarding playbooks are important. You're really shifting, okay? You're shifting from founder-led to a repeatable process. Some of the financial milestones that I've focused on in this stage was in that $3 to $10 million annual revenue growth. I wanted to have strong net profitable targets as I grew. 15% or greater EBITDA type targets are important. You're looking at your cash reserves and your line of credit access because you'll have to fuel growth. And so how do I do that? Some of the key KPIs I like to look at, start to think about customer lifetime value because you'll have repeatable transactions within customers. So what's that LTV? The revenue growth rate, the margin, average gross margin and net growth rate. And then finally, something to help you with customer experience is something like the Net Promoter Score, where you measure I'll say the reference characteristics. Is a customer willing to refer you to a friend or colleague? Now we're going to talk about stage 4, which is scale. And scale is really this fundamental moment where you go from 10 million to the 50 million plus range. Vern Harnish, his book is on my back shelf, Scaling Up. You can't scale chaos, system scale, people don't. And it's really a way to really succinctly think about how do you scale. And you really are starting to contemplate proven systems and leadership framework. So at this moment, the business isn't just running, it's growing without you as a founder in every decision because other people are making those decisions. And in a way, the business is like a rocket. It leaves Earth's atmosphere. You can't just add more fuel. You got to have the right engines. And so you're breaking gravity to keep that climb going. And so founders sometimes mistake the differences between growth and scale. They are not the same thing. On growth, you're adding revenue with equal or increasing cost, where scale, I'm adding revenue faster than my cost increases. So it's not linear in its comparison. Growth many times is founder dependent, where scale runs on systems and teams. Growth can feel busy, stretched, kind of messy, where scale feels efficient and strategic. Growth has a lot of manual processes, where scale is very automated and it's optimized processes. In growth, you're focusing on sales and delivery, where scale, I'm focusing on efficiency, on the infrastructure, and on leverage. So think of it, in another way. If growth is like building a taller tower, you're just stacking effort and people. Scale is when the rocket lifts off. I've got engines, I've got systems, I've got the flight plan. I'm off the ground, and the other thing gets you into orbit, right? So the business, again, it's not just running, it's growing without you in every decision. So you want to have that ability inside that management infrastructure where you've delegated responsibilities. They know how you think, they know the strategic goals of the company, and they're going to begin to execute. It's also a place where data becomes your best friend. Culture is a strength or it's a silent killer. And in this place, we might be thinking about mergers and acquisitions, but we'll wait to another moment to talk about what that means. And then ultimately, you need operators. You don't need people who just do. You need people who are going to actually operate the business. Strategic planning in this stage is a system. You're going to start months before the year end. You're going to model out different growth paths by department, and you're going to make sure your leadership team is aligned around the big bets that you're going to make. It's really about managing risk and scale. So again, when we think about the financial milestones of this stage, we're talking about $10 to $50 million in annual revenue. We're talking about sustained, strong multi-digit EBITDA, scalable financial reporting, and audit controls. KPIs to consider are the revenue per product or service line, You'll have department level returns on investment measurements that you'll want to do. You'll have employee engagement scores. How are the employees producing? And then you'll have that customer acquisition cost payback period. How long does it take me to recover the cost it took me to generate that net new customer? Okay, so now we're going to go into stage 5, which is I'll call it maturity stage. And I'm going to refer to one of the greatest investors, certainly in my lifetime, is Warren Buffett. He had this quote: business schools reward difficult, complex behavior more than simple behavior, but simple behavior is more effective. And so this is really where I'd like to just call it the big leagues. You've got market share, you have some brand equity, and honestly, you have the potential for complexity. And so you're focusing on optimization. You're thinking about margin protection in the business. You're thinking about strategic positioning. In some ways, you might be deciding what not to do, right? You don't want to invest in the wrong thing. The core component here, in my own experience with my companies, is you must have an innovative mindset year over year. Because if you're not thinking about innovating within your business, you're going to become irrelevant. Look at taxis compared to Uber as a simple example. In some ways, you're starting to plan like a public company. It may be that you have an annual strategic plan, but you have a multi-year strategy. You probably have a board of advisors and a board of directors beyond just the investor community. You're also looking at competitive analysis. So it's going to be more of a global sense, regardless of the markets that you play in. You're going to be looking at some innovation pipelines. And quite frankly, there may be regulatory components of your business that you have to consider. One of the things that I like to do in my companies is to use a tried and true analysis tool, SWOT, right? Strengths, weaknesses, opportunities, and threats. But what I like to do in the company was apply those on a per functional area of the business: sales, marketing, operations, HR, finance, and so forth. So here's some examples of things that I would look at. In the sales, I would be looking at new market opportunities. Those are strengths. Legacy client dependencies, weaknesses, potential supply chain disruption, right? Upcoming trends. What are the trends in my industry, and where are those opportunities for me to go execute against? And then what are the competitive pressures, the threats? If I look at marketing, I'm looking at things like brand perception, lead quality, campaign fatigue, new media or channels. In the operational part of the business, I'm looking at efficiency. I'm looking at any potential scalability limits. Do I have any vendor risk, supplier risk within the operational function of the business? And do I have any technology debt in the business? Technology is a life cycle. And so that can be what I like to call a deferred maintenance item if you're not careful. And it can also be, quite frankly, a cash suck on the business if you're not paying attention. HR. I want to look at my cultural strengths and weaknesses. I want to look at leadership gaps. Again, looking at future talent and ultimately turnover risk. Key employee loss can be very expensive and time consuming. And so you want to be able to evaluate your teams on a consistent basis. Obviously, in the financials, I'm looking at stability. I'm looking at cash efficiency. I'm looking at regulatory exposure. I'm looking at capital expenditures and options, debt service coverages, and those kinds of things. So by doing these functional SWOT, it's a way to sharpen your team and the leadership within the team without you having to get into the weeds and doing it yourself. You're kind of making them, if you will, self-aware. The way you as the founder or ownership team would think about their functional area and allowing them to take on some of that responsibility. Because really this is about being adaptive and nimble in a highly competitive market that you're operating in. Some of the milestones that I like to look at are things like market share, the margin mix within the business, if I have an innovative uh, initiative, what's my success rate? And fundamentally, I'm looking at enterprise value of the business. How is my enterprise value growing in the company? Okay, now on to stage six. And stage six is what I like to call a replication stage. And this is the place where I'm either replicating systems, processes, and people for organic growth, and or I'm looking at inorganic growth, which is where the M&A opportunity or option for growth comes in. Zig Ziglar had a great quote: "You don't build a business, you build people and they build the business," which is 100% truth in my own personal experience. Because really what you're doing is you're not just scaling the machine, you're cloning it. So the best way to think about a clone is, I'll call it adjacent markets, or new markets that you're going to bring this well-oiled machine into a net new market with potential total customer acquisition. And so you're looking at your model and you're going to expand. So expanding doesn't mean blowing it up. So again, I think another way to maybe say this is, you're either going to compound, right? I'm going to compound with a new market, or I could potentially collapse. And so you have to be sure that the systems, the processes, the tools, the people are ready to level up. They're ready for you to bolt on a new market and go after a net new customer acquisition strategy. So some of the financial milestones that I like to think about here is, you're basically going from around that $50 million range with predictable contribution of margin by unit, right? Or by the segment itself. 20% plus EBITDA sustained across all your entities, a strong balance sheet, cash reserves, strategic, I'll say, plays with your cash. Obviously clean, auditable financials across all the business units within the company. Some of the operational KPIs that I would suggest that I've personally used: revenue per head. It's an efficiency across all locations. You should have an expectation based upon new markets as you go into them. Again, the contribution margin by product or by acquisition. Another thing that sometimes entrepreneurs don't think about is the span of control. What is the leadership capacity that I have during growth to be sure that I have enough people and the right people in in the organization? And then percentage of systems or processes that are standardized across the unit. It's really critical, because what you're doing here is you're looking for the measurement of repeatable muscle memory of the systems and processes across the company, because it's really critical for any organic or inorganic growth in the company to have that high percentage of repeatability in the company. Now, I'm going to do a separate podcast episode on mergers and acquisitions and the strategies that have been, I'll say, applied to me when I'm exiting the business, as well as consideration if you're going to use this as a growth strategy for replication of the business. The last stage is really this, I'll call, exit stage or transition stage. If you want to have a great exit strategy, you have to have a legacy plan for the team that's helped you bring the business to this point. So it's not really the end of the business, it's simply the evolution. In my own exits, as I've exited the different companies, it's always, I'll say, been about a transition from entrepreneur ownership traditionally being either a strategic acquisition or a growth type acquisition in transition for the legacy team. And so it was a way to go from, I'll call it's emotional. So when you sell, you have a transition to new ownership. When you go employee owned, you're transitioning from that founder led, founder owned to the team owning it, or it's a transition within your family. And I would just say that every one of these takes years of preparation. You have to be prepared financially, obviously, to attain the target, the goal that you have as a financial target. But you also have to be ready operationally because a new buyer or a new team of managers have to have confidence that the business can exist without you, the founder or founder team. And then ultimately, you have to be prepared emotionally. And so you're going to be designing this exit, in my view, years in advance. You're not deciding this overnight. And so your planning shifts really towards positioning towards your strengths. You're focusing on reducing the owner dependence. The cap table has to be cleaned up. You're designing, quite frankly, an attraction to your business and the ability for a smooth transition. Some of the key things that I think are critical for an exit, you have to think about and identify the ideal exit path. Is it a strategic sale? Is it private equity? Is it ESOP? Is it a family transition? What's that ideal exit? And start preparing for that today. The second is you're going to need a team of advisors, and you're going to have legal, you're going to have tax, you're going to have an M&A in order to structure this properly. You want to build that leadership bench so that that business runs without you. Fundamentally, you're going to align the exit strategy with your personal, financial, and lifestyle goals. And then finally, you're going to prepare, I'll call it the data, right? The financials, the contracts, the org chart, intellectual property, all the things associated. And I have a dedicated program that I run for entrepreneurs who are preparing to exit, where I take them through the entire life cycle of preparation for an acquisition or transaction. Something to think about if you're planning a family or internal succession, you're going to be grooming the next generation of leaders, and you have to start that early. You have to think about the development plans and the mentorship programs that you need based upon the individual characteristics of the people that you think are going to execute those roles in the future. And you want to set clear roles. You want to have expectations. You want to set timelines. If you're going to sell the business, you're going to be maximizing profitability. You're going to stabilize growth. And you're looking at the ability to transfer this asset to a buyer in a very low risk way, where they feel confident they can hit their internal rate of returns, their return on investment without a lot of risk. So the importance around the narrative, around the market opportunity, and the advantages that you possess. One guy expressed it, you have to have meat on the bone. You have to demonstrate the ability to continue to progress forward. You're going to build relationship over time with potential acquirers before you need them. It's one of the things that I learned in my own journey across my exits is typically having an awareness of the people who are in the market making acquisitions and building relationships, and the things that were important to them will help you in this structuring process in your mental framework as you get ready. Some of the financial milestones that you'll have to consider are you have to have audited, clean financials, minimum 3 years. You have to have strong profitability multiples. And taking a look at your industry standard profitability and how are you meeting or exceeding those industry standards. You need to think about your valuation strategy because there's lots of different ways to value a business. And there's different models, there's different standard models that are out there that people are going to apply to your business. And so by understanding those models and understanding the valuations that come out of those models, we'll start to build a framework for you financially on how you want to approach a potential sale. Obviously, some of the KPIs that I like to think about in this stage are the owner involvement score, right? You want the need for the owners, the entrepreneurs, to be present and there pretty low. Business needs to be able to execute without you. You need to have a readiness for the due diligence process that you're going to undergo in these transactions. You're not going to get to an 8-figure transaction or even a high 7-figure transaction without a tremendous amount of due diligence. And that's part of my 90-day program that I run, because I want the entrepreneur and the team to be prepared for what's going to come at them as they go through this journey. You need to be able to demonstrate profitability and year-over-year growth, consistency, and then also have a pipeline of potential buyers and advisors. In the last transaction that we did, as we decided to go through this journey, the initial IOI process, or indicator of interest process, that we ran generated over 65 potential buyers to I'll say, the funnel. And so it was a very interesting process. And so by generating I'll say it, a large pool of potential candidates, really gave us options as we went through this journey. And so look, I want to tell you thank you for your time. I know this has been a longer episode of the Launch Capsule. I try to keep things within 10, 15, 20 minutes, but I felt like it was really important to walk through these different stages of business. And no matter where you are in the stage life cycle of your company, the key is really just knowing where you are. What is the next level going to demand of you? And planning is not going to be a one size fits all, right? But I think it's important as you go through these stages. In the beginning, it's quick, right? A little chaotic. Towards the latter parts, it starts to be very structured and strategic in order for you to achieve the long-term goals that you have as an entrepreneur. Thank you so much for joining me on this episode of the Launch Capsule. I really appreciate it. I hope you have an awesome day. If any of you have any questions or comments, please reach out to me. I can be reached at entrepreneurship@dubos.me. So again, have an awesome day, and I wish you the best.
That's a wrap for today's episode of The Launch Capsule. The Launch Capsule. With your host and mentor to success, James DuBos. If you enjoyed today's episode, don't forget to subscribe and share.